60 minutes before the end of trade, the final trading day of the week. And again, it's been a day of volatility. The Dow dropped below 30,000 earlier in the day, and then it sort of came back. The market is off 500, nearly 2% at the moment. We're off the lows of the day, but, well, it's anybody's guess where it'll end up. It'll end up down, that, I'm pretty certain about that. But just how far, whether we see a burst of selling in the last hour, it's hard to tell. The markets and the events that have hit. The limits are off, and the battle resumes. GameStop shares are surging to end this historic week. As US markets are sliding, Joe Biden warns there's no time to waste on government stimulus. And 2 new vaccines are added to the arsenal in the fight against coronavirus. We are live in New York. It is Friday, almost the end of the month, 29th of January. Weekend's ahead. I'm Richard Quest, and I mean business. Good evening. Tonight, it's the Wall Street battle that rages on. GameStop, the stock at the center of it all, is rallying since Robinhood reopened trading, or at least buying, to its online customers. GameStop shares have recouped much of Thursday's losses. The price collapsed when Robinhood blocked people from buying the shares, along with other volatile stocks. Some online platforms like Interactive Brokers have kept their restrictions in place. The founder and chairman of Interactive will join us shortly to explain his decision and what might be the democratization, if you like, of the markets. But Robinhood changed its decision and made an about-face after a torrent of criticism. Paul LaMonica is with us. OK, Paul. So Robinhood took a swathe of criticism. They said it wasn't a liquidity reason, but rather that it was necessary to do it for orderly markets. Today, they found they could open up again.
Yeah, I think that they realized that there was such a significant amount of backlash that all of a sudden Robinhood was going from the darling of the millennial day trading crowd to being the villains here in this story, along with the short sellers. And I don't think that's a position that Robinhood wanted to be in. And they recognized that in order to have a functioning free market, as crazy as this has been, you need to have people be allowed to buy shares of a company that's being heavily shorted.
Why did it rise today? I mean, even for the... All right, so you've got those retail investors, what I would call quasi-professional investors in many cases. They're not sort of just like that. You've got them, they know that the price doesn't reflect the underlying fundamentals of the company. They know there's a short out there. But who wants to buy into a stock where there's every opportunity, at these elevated levels, where there's every opportunity that it's going to fall, other than to short it?
I mean, I think it's all about the ability to trade in and out very quickly in a world where you don't have as many fees and commissions as you used to. I don't know if something like this would have been possible in the late 90s, early 2000s, the advent of online trading, when it was a lot more expensive for people to execute trades. Now that you don't have that anymore, it is a lot simpler and cost-effective for an average day trader to say, hey, you know what? I'm going to keep buying this stock, and then I'm going to sell it quickly as well to lock in some gains. And then, you know what? Maybe I'll buy it back again later in the day, depending on how volatile it's been. And GameStop, AMC, they are extremely volatile right now.
And, of course, you can buy fractional shares, which encourages many more people. We'll talk about that with the Interactive Broker CEO in just a moment. The wider market, Paul, let's look at the wider market. Signs that speculative retail trading is having a wider impact at the moment and spooking investors. The Dow was off down under 30,000 earlier in the day. The wider market has also been sharply. Are we making too much over this potential systemic risk into the wider market?
Yes and no. I think here's how I see it, Richard, and I've talked to a couple of people about it today. One, I don't think that GameStop and the froth in its stock is necessarily the same thing as Lehman Brothers in 2008 and all this counterparty risk where Lehman Brothers brings down AIG and Washington Mutual and the financial system. That's not the case with a still relatively tiny video game retailer. The issue, though, is a lot of professional investors are getting squeezed by this Reddit crowd. And as a result, if you are in a stock that you have been shorting and you see it going up and you need to get out of that position, you may have to take some money off the table from profitable bets that you've made already. So is it possible that there are hedge funds out there saying, you know what, we're going to trim our stake in the FANGs so that we can cover our GameStop position? Perhaps. That's what some people have told me today. I don't know if that explains exactly the entire reason for the broader market being this much lower today. But again, there are a lot of things going on. Remember, keep in mind that the market rallied so strongly at the end of last year. A little bit of profit taking isn't that big of a problem right now, I don't think.
And of course, for all those buyers, unless it's on options, there is a seller on all of those on the other side. So that's how you get to that position. Paul, thank you. The SEC says it will closely review the restrictions placed on trading this week. It also warned that extreme volatility put the whole market at risk. Capitol Hill is pressing for investigations into Robinhood's behaviour in a rare moment of bipartisan support. So far, the White House isn't taking such a stance, or much of a stance. They say the situation and the SEC has it under control.
I know the SEC issued a new statement earlier this morning, or just before I came out here, and I'd certainly point you to that and others to that. And we, of course, respect the role of regulatory agencies. They are closely monitoring the situation, but it's under their purview at this point in time.
White House correspondent John Harwood joins us. Congress is looking into this. Is the White House concerned, either because it could cause something greater or there's a perception?
I don't think so. I don't think they believe it is capable of causing a greater damage to the economy. And they don't want the distraction from their main priority, which is passing their COVID relief bill. They're also trying to emphasize the idea that in the wake of the Trump administration, this is a professionally run administration that lets experts do their job. The experts in this situation are the SEC. Congress, of course, will pipe up whenever there's something of substantial public interest, although I wouldn't expect a whole lot to come from the congressional investigations. Members of Congress of both parties want to speak up for the small investor. The small investor, or a subset of small investors, is the one that's generating this huge oscillation in the price of GameStop. Many of those people, of course, are going to end up losing a lot of money, but it's their prerogative in a free market to do that, and they appear to be motivated by the desire to hurt some of these big Wall Street hedge funds. That's not something that either the White House or members of Congress are going to stand up and say, hey, you can't hurt a big hedge fund.
No, but there are, in a new Congress, there are those, in terms of jockeying for position, whether it's the chairman of the Banking Committee or Elizabeth Warren, all of whom will be, to some extent, wanting to lay down a marker. I'm not saying it's going to be Warren Mark II from her earlier battles, but so early on, they'll want to set a red line, to mix my metaphors.
Yes, I mean, rhetorically, they're going to say, as Elizabeth Warren has said, I've got no sympathy for those big players on Wall Street. You know, Bernie Sanders says the business model of Wall Street is fraud, and that you get the downsides of that as well as the upside. I think that is mostly rhetoric, though, and it's rhetoric that you'll hear from some on the right, Ted Cruz, for example, but I don't think that rhetoric is likely to result in any big legislative push.
John, thank you. Have a good weekend, sir. I appreciate it. Thank you, John Howard. Joining me from Washington. Robinhood's CEO says they made the decision to halt the purchase of volatile stocks, there were 13 in all, to protect the firm and its customers.
I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants. We haven't really seen anything like this before. And to prudently manage the risk and the deposit requirements, we had to restrict buying in these 13 stocks.